What a brutal day in the market today. The S&P 500 at its worst day since October, down 2.6%. The Nasdaq was down 4.2%. This led the market to snap its 10-week winning streak. The chip sector bled out $1 trillion alone today. There's a few reasons for this, and I flagged this as a possibility in my video earlier today. I didn't plan on making another video today after my jobs report video this morning, but with the market sell off the way it did, I had to. I flagged this in my earlier video that, although the jobs report was strong, it was so strong with jobs being a lot more than expected at 172,000 compared to 80,000, that bond yields rose. 10-year bond yields were up over 4.5%. That's a red line in the sand that the stock market doesn't like. And that really led to the sell-off. That was like the crescendo moment and the last straw on the camel's back, because the other day we had Broadcom earnings, and although they doubled revenue estimates, they gave poor Q3 guidance. And even though the Q3 guidance, I'd say, was good, it wasn't good enough among the highest expectations. And because of that, the market started selling off in terms of the growth sectors the other day. This jobs report being much higher than expected and bond yields going up the way it did was the last straw on the crescendo moment, as I said. And then lastly, next week, we have the SpaceX IPO. And a lot of investors are selling their stocks to raise cash so that they could get it into the SpaceX IPO, even retail investors. And the same story is actually happening with Bitcoin. A lot of people are selling their Bitcoin to raise cash so that they could take part and participate in the SpaceX IPO. So that's a factor there too. But Bitcoin dropped under $60,000 as well. So it's not just an AI weakness. Bitcoin actually felt it too. And another thing, I think this is a rotation. This is the beginning of a rotation from growth to value. We might see this happen over the next. Few weeks to a few months, where value stocks outperform growth stocks until we have clarity with a few more months of inflation reports, and we have some clarity about oil in the Strait of Hormuz. So, we might have especially for growth, a few months of a consolidation period, and value will likely take the baton from here. That's why we saw the Dow outperforming the S&P 500 and Nasdaq. So, I'm not surprised this sell-off happened, considering bond yields were starting to spike. I think it's misplaced because, as Kevin Moore says, growth doesn't always cause inflation. But at the end of the day, he has to get the rest of the Federal Reserve Board of Governors to agree with him. So I don't think there's going to be a hike, but let's see what happens.